Hey everyone, ready to untangle this new Italian budget, the Manovra 2025.
It's definitely a big one. Lots to unpack.
You guys sent over a ton of interesting stuff, excerpts from the press conference, some analysis pieces. I think what you really want is to understand what it all means, right?
The big picture, yeah.
Yeah.
Especially for anyone trying to figure out where Italy's economy is headed.
Exactly. So instead of getting lost in the weeds, we're going to focus on the highlights, the stuff that'll really help you understand what's going on.
The government's priorities, their strategy.
All right, so imagine this. Minister Giorgetti and Deputy Minister Leo, they're at the microphone, fresh off finalizing this brand new budget law.
Right, and one of the first things that jumps out is this huge emphasis on families, especially families with multiple children.
Yeah, they kept coming back to that, didn't
It
they?
was a central theme for sure.
Now, we know Italy's birth rate has been declining for years, right? I mean, you see that in some of the other sources. Do you think this budget is a direct response to that?
Oh, absolutely. I think it's a clear attempt to address that demographic challenge.
So how are they doing that?
Well, one of the key things is this new family quotient system for tax deductions.
So not everyone gets the same deduction anymore.
Right. It's tailored, favors larger families, especially those with lower incomes.
So it's a way to provide more targeted relief, right, where it's needed most.
Exactly. Incentivizing larger families, potentially boosting those birth rates. They also talked about extending paid parental leave, 3 months at 80% pay, up from 2 months.
3 months. Still pretty short compared to some other European countries, though.
That's true. It'll be interesting to see if it actually moves the needle on those birth rates. And there's also this mention of a contribution for newborns coming back next year, but we'll have to wait for more details on that one.
Okay, so lots for families, but it's not just families, right? This budget has some stuff for workers, too.
Oh, definitely. One of the big takeaways there is that they're keeping those reduced tax rates on income. Those 3 brackets, 23%, 28%, and 35%, those are staying put.
Which I bet a lot of people are relieved to hear.
I would think so, yeah. And there's even a chance that second bracket, the 35% one, could see even more relief.
Really? How so?
They've linked it to the success of this tax amnesty program. If it brings in more revenue than they expect, they might use that to fund further reductions.
Ah, clever. So it's a win-win, right?
That's it.
They incentivize people to clear up any past tax issues and then potentially free up funds for broader tax relief,
Exact.
keep more money in people's pockets, which theoretically should boost spending.
Right. Give the economy a little jolt.
Okay, I like where this is going. And they're also increasing the tax-exempt bonus for employees, right?
They are, yeah, bringing it in line with what retirees get, which is €500.
Now, tell me about those performance bonuses.
Oh, those are getting a boost too.
Had to ask.
They're raising the tax-free amount on those from 10% to 15% for the next 3 years.
Okay, not bad, not bad.
And here's where it gets really interesting. The ceiling for those tax-free bonuses is also going up.
So it's not just the percentage, but the total amount that can be tax-free.
Exactly. $1,000 for most workers, and get this, $3,000 for employees with children.
Whoa, okay. That's a pretty serious incentive. So between the tax breaks and these bonus boosts, they're really trying to make working more rewarding, financially speaking.
It seems that way, yeah. And if you connect that back to those family-focused policies, it paints a pretty interesting picture.
Like a multi-pronged approach. Encourage work, reward performance, and make it easier to raise a family.
It's all about those long-term prospects, right? Investing in the future of the economy.
I'm with you. Okay, but what about people who are nearing retirement? What about pensions? Any big changes there?
That's interesting. No major overhauls, which, given all those demographic trends we talked about, is kind of surprising.
Yeah, you'd think they'd be doing something big there.
Right. But there are some new incentives aimed at encouraging people to keep working past retirement age, especially skilled workers.
Ah, makes sense. Keep those experienced folks around a bit longer, especially if you're facing labor shortages.
Precisely. Retaining that valuable knowledge and expertise. And the incentives they're offering are pretty enticing. Significant financial benefits plus tax breaks.
Okay, I'm definitely curious to see how that plays out. Now let's talk about the elephant in the room, the financial sector. Sounds like they're being asked to chip in a bit more with these so-called contributions.
Contributions, that's what they're calling them, yeah. But, a lot of people are saying it's basically an extra profit tax.
And I bet that's sparking some debate.
Oh, yeah, definitely.
So let's break it down. What do these contributions actually involve?
Well, for banks, It means suspending the deduction of deferred tax assets for 2 years, 2025 and 2026.
So basically, they're increasing their tax burden for that period.
Exactly. And for insurance companies, they're imposing a stamp duty on certain types of policies, excluding life insurance, though.
And they're calling this temporary.
That's what they're saying, yeah.
So how is this all going over? Is there a lot of pushback?
Well, as you can imagine, anytime you talk about taking a bigger slice from the financial sector, there's going to be some resistance. Some people argue it's necessary, to address income inequality and make sure everyone's paying their fair share. Others worry it could stifle growth, discourage investment.
It's a tough balance to strike, for sure. So far, we've covered families, workers, and the financial sector. What's next on the agenda?
Well, we need to talk about the government's plans for spending. They're committing to reducing public spending across the board by an average of 5%.
Okay, so belt-tightening time. But where are they cutting? And are there any areas where they're actually increasing spending?
Those are the million-dollar questions, and that's exactly where we'll pick things up in part 2 of this deep dive. Stay tuned.
Welcome back. We're still digging into this Manovra 2025, and I think you'll find this part pretty interesting.
Yeah, let's get into it. Last we left off, they were talking about some pretty significant spending cuts.
Right. Across all the ministries, an average of 5% reduction. But I'm curious, are they talking about slashing essential services? Or is it more about finding efficiencies?
I think it's more about streamlining operations, finding ways to do more with less.
So tightening the belt, but not like full-on austerity.
Yeah, that's a good way to put it. And what's interesting is that they're pairing these cuts with some increased scrutiny on entities and foundations that get state contributions.
So they're keeping a closer eye on where that money's going.
Exactly. More accountability.
Makes sense. So what does that actually look like? What kind of scrutiny are we talking about?
Well, for starters, stricter financial guidelines. And there's even been talk of potentially capping executive compensation for these organizations.
Really capping their salaries.
It's been floated, yeah. The idea is to make sure that taxpayer money is being used responsibly.
And probably making sure it's actually going towards its intended purpose.
Right, not lining someone's pockets, which, not everyone's going to be happy about.
I can imagine. There's going to be some pushback on that.
Oh, for sure. But it aligns with this whole theme of fiscal responsibility that runs throughout the budget.
Right. They want to show they're being careful with public funds. But you mentioned earlier that they're not just cutting. There are some areas where they're actually increasing spending.
Absolutely. Healthcare being a big one. They've reaffirmed their commitment to increasing healthcare spending, keeping it in line with GDP growth.
Okay, that makes sense. Got to keep people healthy.
Exactly. Especially with an aging population, right? The demand for healthcare services is only going to increase.
But they're also trying to reduce spending overall. So how do they reconcile those two things?
That's the balancing act, isn't it? Tough choices have to be made. And you have to factor in the political realities, too. This is a coalition government, so there are different priorities and ideologies at play.
Right, they're trying to keep everyone happy.
Mm-hmm.
Not an easy task.
Not at all. And you see those competing interests reflected in the budget, the focus on families, those pro-worker tax measures. That probably resonates with certain parties within the coalition.
While the spending cuts and the contributions from the financial sector might appease those who are more fiscally conservative.
Precisely. It's like they're threading a needle, trying to keep everyone on board.
All right, so we're seeing how this budget is really a reflection of the bigger political picture. Now, you mentioned earlier that they might use revenue from that tax amnesty program to actually reduce taxes even further.
Yeah, that's a really interesting idea, like a positive feedback loop. Encourage people to get their taxes in order, which generates more revenue, which could then be used to fund further tax cuts.
So potentially a win-win-win. But of course, it all depends on how successful that tax amnesty program is.
Right, that's the big unknown. Hard to say how many people will actually participate.
And ultimately, whether it'll generate enough revenue to make a real difference in those tax brackets.
Exactly. It's a bit of a gamble, but it shows they're thinking outside the box.
I like that. Trying new things. Now, let's talk about another interesting thing they're doing. This whole thing with funding public sector contracts based on projected inflation rates, rather than using past inflation data.
Ah, yes. That's significant. It's a much more forward-looking approach, acknowledging that what happened in the past might not be a good predictor of the future.
So they're trying to anticipate future price increases.
Exactly. Which, of course, comes with its own set of challenges. Predicting inflation accurately is, well...
Not exactly an exact science.
You could say that again. But it shows they're willing to adapt, to break with tradition if they think it's necessary.
It's a bold move for sure. Could pay off big time, or it could backfire.
Yeah.
We'll have to wait and see. Now, going back to those spending cuts, you talked about streamlining operations. Do we have any concrete examples of what that might look like?
Well, I think a lot of the details will become clearer as things get implemented, but one area where we might see some changes is in how state-funded entities are managed and overseen.
So those organizations that are facing increased scrutiny.
Exactly. There's potential for consolidation, maybe merging some entities or even eliminating those that are seen as redundant.
Less bureaucracy, more efficiency.
Precisely. And it brings us to another balancing act, right? Providing relief to certain sectors while also being mindful of fiscal responsibility.
Right, you can't just spend money you don't have.
Exactly. Now remember that bonus mobili program, the one that gives people a tax deduction on furniture and appliance purchases.
Oh yeah, I remember that.
Well, they're extending that into 2025.
So they're keeping that going.
They are, which is good news for that sector, obviously,
Yeah.
but it also means foregoing some tax revenue. And they also had to address the whole land registry issue, the catasto.
Oh, right. Some people were worried about property taxes going up.
Yeah, but they made it very clear that they're not introducing new property taxes, just fulfilling existing obligations.
So trying to calm those anxieties.
Exactly. Again, balancing competing priorities. Stimulating the economy, but also making sure they're not overburdening taxpayers.
Okay, lots of different pieces to this puzzle.
Absolutely. And that's what makes it so fascinating. It's a real snapshot of where Italy is right now, both economically and politically.
And a glimpse into where they hope to be in the future.
Right. And I think there's even more to uncover. So what's next on our agenda?
Well, we've looked at the specific measures, we've talked about the politics, but I think it's time to zoom out. What does this all mean for Italy's overall economic strategy? And where does it position them on the global stage? That's what we'll explore in part 3. Okay, so we've really dug into the specifics of this Manovra 2025.
Yeah.
But now I kind of want to step back, look at the bigger picture.
Yeah, the big picture.
Like, what does this all actually mean for Italy's economic strategy? What's the message?
Well, it's definitely not just about the numbers, right? It's a statement, I
Right,
think,
for sure.
about where they see Italy fitting in, in the global economy.
So what are they saying then? What's the message to the world, to Italians? Because it seems like a mixed bag to me.
It is a little bit, right? We've got support for families, workers, but also all this talk about, fiscal caution, being careful, putting pressure on some sectors.
It's like a balancing act almost, right?
Yeah, exactly. It's like they're walking this tightrope trying to balance all these competing priorities.
So on the one hand, we've got this push for growth.
Right. Encouraging investment, boosting certain industries, trying to make Italy, a more attractive place to work, live, raise a family.
Yeah, the pro-growth agenda they keep talking about.
Exactly. But then on the other hand, you've got this undercurrent of caution.
Almost like they're battening down the hatches just in case.
Yeah, preparing for tough times. Like they're saying, let's celebrate, but also keep an eye on those storm clouds on the horizon.
I like that analogy. And honestly, it makes sense, right? With everything going on in the world,
Oh, absolutely.
inflation, interest rates,
Yeah.
all the geopolitical stuff,
Yeah.
Italy's not immune to any of that.
Right. They're trying to find that balance between stimulating the economy, but also, building in some resilience in case things go south.
It's exactly.
You prepared.
So is that part of the message they're sending to international investors too? Like, hey, come do business in Italy, but also we're being responsible.
I think so, yeah. It's all about projecting stability, right? Showing that they're taking things seriously.
But what about those contributions from the financial sector? Doesn't that send a mixed message? I mean, some investors might see that as government overreach and get spooked.
Yeah, that's true. That's a bit of a gamble for sure. Some people are going to see it as, making sure everyone pays their fair share. Others are going to worry that it'll scare off investment.
It's tricky for sure.
Definitely. We'll have to see how it all plays out.
Only time will tell.
Yeah.
But speaking of gambles, what about this whole thing with using projected inflation to fund public sector contracts?
Oh, yeah. That's a big one.
I mean, it's definitely a more forward-looking approach, right?
For sure. It shows a willingness to adapt, to break from tradition if they think it'll work better. But it also relies heavily on those projections being accurate.
Yeah, and predicting inflation as well.
Like reading tea leaves.
Exactly. So are they being overly optimistic? Or do they really think they know where inflation's headed?
It's a good question. It all goes back to this idea of the government trying to anticipate the future, trying to be proactive.
Okay, so let's try to tie this all together. We've got this balancing act between promoting growth and being prepared for a downturn. We've got this new approach to budgeting, and then this whole question of, supporting certain sectors while also being fiscally responsible. What's the overall story here? What's the big takeaway about Italy's economic vision?
I think the story is one of cautious optimism. There's a clear recognition that Italy's facing some real challenges, but also this belief that they can overcome them.
It's not just about survival then.
Yeah.
It's about thriving.
Yeah, exactly. It's about creating an Italy that's attractive to investors, to families, to workers, an Italy that can compete globally, but also, take care of its own people.
That's a pretty ambitious goal.
It is. But that's what makes this budget so interesting. It's a bold statement. It says, Italy's ready for the future.
Well, there you have it, folks. Our deep dive into the Manovra 2025. We covered a lot of ground, but honestly, I think I have even more questions now than when we started.
Me too. It's like the more you learn, the more you realize there is to learn.
Exactly.
Yeah.
So to everyone listening, we want to hear from you. What stood out to you? What are you excited about? What are you worried about? What does this budget mean for the future of Italy? Keep those questions in mind as you keep learning, because this story's just getting started.
Thanks for joining us.